Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. This is Friday morning, the last trading day of the week, and we have a lot to talk to you about as well and talk about all the cues as well. But first up, as always, let's take a look at the Asian markets and what they are doing. Now, we did see that Wall Street closed in the red yet again, and that is something which is impacting the moves in the Asian markets, which are largely mixed right now. So it's only Nikkei which is seeing some green. That index is up around 0.7%. But barring that, most of it is in the red right now. Taiwanese index down 0.1%. We have Hang Seng sitting with cuts of 0.5%. The rate hike fears continue to linger in the US markets. Earnings reaction is something that everyone is watching out for as well. But for now, yes, it is red on the Asian screen largely, and SGX Nifty is indicating that the start for our own markets could be in the red. That one is indicating a downtick of around 94 points, so to say. Yes, that's a 94-point downtick at 17,837 on the SGX Nifty as we speak. But let's move on and talk about the US markets, because that's been in focus again. Wall Street ended yesterday's session lower. The Dow Jones finished close to 250 points lower, while the S&P 500 and the tech-heavy NASDAQ, it closed about 1% lower. CNBC's Frank Holland gets us a wrap of all the action on Wall Street.
Stocks started the day higher, boosted by some strong corporate earnings, but they fell throughout the session to close lower as investors return to the ongoing worries the Fed will significantly slow down the economy as it raises interest rates to fight inflation. The Dow ended with a loss of almost 0.75%. The S&P finished down 0.9%. The NASDAQ, it dropped 1%. The Walt Disney Company is cutting 7,000 jobs and plans to reduce costs by more than $5 billion in a major restructuring that prompted activist investor Nelson Peltz to drop his fight to get a seat on the company's board of directors. It's the biggest move by CEO Bob Iger since he returned to the job in November. In a live interview on CNBC this morning, he said he expects to stay on the job for just 2 years. And Yahoo plans to cut 20% of its staff by the end of this year. That's just about 1,600 jobs. 1,000 of those positions will be eliminated this week. That's what's happening here in the U.S. Back to you in Mumbai.
All right, that's the U.S. market action. On that note, let's also listen into some views coming in from Roger Ferguson, who's the former Fed Reserve Vice Chairman, and Jim O'Neill, who's the Senior Advisor to Chatham House.
Markets are really hungering for anything that suggests that the Fed's going to ease, and I think markets tend to be overreacting to the numbers that look as though they are inflation-friendly, and underweighting the numbers that suggest labor markets are still very tight, and the Fed still has some work to do. Too early to declare victory on inflation. Importantly, I think Chair Powell specifically said something like that at his most recent set of comments.
The U.S. Might end up going into a recession if the Fed really puts the brakes on. The markets don't really believe that the Fed's going to keep doing what it said it's going to be doing. And that's another part of why I think there is some grounds for there's quite a bit of evidence that the inflationary pressures are slowing more than people are talking about, including the consensus at the Fed. And as a very famous US macro investor once said to me, the only thing you know for sure about the Fed is when the evidence is changing in front of their eyes, they change what they say they're going to do. And, you know, I think that's quite a wise thing. But, you know, obviously, I think the next inflation read, I'm not sure when you guys have got it, it's coming pretty soon, right? I think that's going to be a really big thing for all global markets.
Okay, that is some important commentary coming in on the US markets, and that's all about what's happening in the global markets. How will these cues impact our own markets? We have our domestic cues and earnings as well to track. We have a research team joining in to tell you just that, the trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, happy Friday to all of you. Finally, the last day of the trading week is here. But Ekta, before that, can you tell us what is the market setup looking like today?
Thanks for that. Well, yes, the markets did end with minor gains yesterday. The Nifty closed above the 20-day moving average of 17,872, so that was a positive. But most of the Adani stocks continued to be under pressure. We have MSCI news today as well to reckon with. FII's net sold 144 crores, which was the lowest sell figure that we've seen since the 23rd of Jan. So that was a positive. And the DII's net sold, and this was the first net sell figure from the DII since the 5th of Jan of 2023. The net sold around 205 odd crores. But the larger picture for the Indian market is the strong MF inflow, which is supporting sentiment. We saw it for the month of January. Equity inflows came in 70% higher on a month-on-month basis. SIPs continue to be at a record high. So the underlying sentiment continues to be strong for our markets. US CPI on the 14th of Feb, which is next week. Global cues as well as earnings to be in focus until then. The US markets ended lower. Asia is largely mixed. SGX indicating a bit of a soft start. Next level to watch would be the 100-day moving average. Also watch for the week-to-date performance and how we close up, because the Nifty on a week-to-date basis is up around 0.2%. Mid-caps have done better and the Bank Nifty is a little flat as well. In terms of results, M&M, ABB, Glenmark, to name a few, but there are a huge number of numbers which we can expect. So the broader markets especially will be in focus on account of it.
It will be. You spoke about a lot of stocks that will be in focus. So let's go across to Vivek because he has the entire list as well. Vivek.
Well, good morning. So many companies are declaring their results post-market as yesterday. Let's have a look at them. First on the list, Aurobindo Pharma, reasonably good set of numbers. Revenues coming in above the CNBC TV 18 poll, over the 6,400 crore mark. Profitability slightly below the poll, close to 491 crore. HPCL, good beat as far as our own estimates were concerned. Net profit coming in at over 170 crore versus a loss that we were actually anticipating. Voltas, it's been a disappointing set of numbers from the company this time around. Multiple one-offs have actually marred the earnings. Revenues slightly above the poll, coming in over the 2,000 crore mark. However, the EBITDA has been a big miss, coming in at 76 crore versus our estimate of 128 crore. On the back of that, on the bottom line, there has been a loss figure. United Breweries too, the results have been below what the street was anticipating. Revenues coming in at a little over 1,600 crore. However, on the bottom line, there has been a surprise loss that the company has actually declared. LIC, while the numbers are not comparable on a year-on-year basis, however, the value of new business has come in at around 1,800 crore. Analysts are not very enthused with the results that have been declared by LIC this time around. Lastly, new listing Sula Vineyards, good set of numbers from the company. Profitability up almost 15% and margins too quite strong on a year-on-year basis.
Okay, so that is about all the stocks that will be in focus today. But it's time to talk about the F&O space as well. Manglam is joining in with all the updates. Hey, Manglam.
Good morning. So, everyone's looking for some consolidation. That's the word, that's coming in from the F&O space. Yesterday as well, while there was a bounce of about 110 points from the lows of the day, the Nifty risks a bit of a 20 DMA halt because it's consolidating around the 20-day moving average of 17,872 itself. It was weekly options expiry, so the call writers at 17,900 actually kept the lids on the way the gains could take place yesterday. Muted cues coming in from the F&O space, from the cash market space as well. Most selling from DIIs and FIIs perhaps on account of the Adani Group stocks. At the same time, we saw, the Nifty Bank underperform as well. Not too much happening in the index futures where the FIs are still net long at just around 19% with short positions at 81% as well. All eyes now on next week's expiry. What are we looking at? 17,900 calls. Sees a fair amount of writing for a premium of 120 rupees, telling you levels upwards of 18,000 would face a fair amount of support. In fact, at the lower level, however, we are likely to see some support around 17,700. That's what the 17,900 put writers are hoping. 17,750 to close to around 17,800 is where the support lies. In fact, the SGX Nifty opens right in the support zone itself. On the way up, call writers are also looking at the 18,000 call for a premium of 74. 18,050 to 18,100 likely to see a fair amount of resistance. On the way up, we do have the 100-day moving average, which is resistance for the Nifty, which is placed at 17,943. But at the same time, it was the Nifty Bank which was leading the rally, and it's the Nifty Bank which is failing to cross important moving averages, both 41,669, which is the 20-day moving average, and 41,639, which is the 100-day moving average. So for any sort of recovery on the Nifty, if the Nifty Bank crosses these levels, only then can one play for the recovery on the Nifty.
All right, so that is the entire market setup. Thank you guys for joining us and prepping us up for this trading day ahead. Let's do one thing. We'll slip into a break now. Up next, the MSCI will impact. Still tuned into Power Breakfast on CNBC TV 18. The MSCI has released the details of its February index review. CNBC TV 18 also learns that MSCI will implement changes to the free float and market capitalization in Adani Group stocks from the 1st of March. Vivek is joining in to tell us more. Vivek, what are the details of the review and which of the Adani Group stocks they are likely to be affected by this move?
Well, good morning. Absolutely right. So, in line with anticipated date of the MSCI Feb index review. First up, yesterday MSCI had actually put out a release on a notification saying that they had received feedback from the investing community as to how exactly they're going to treat the Adani Group stocks within the MSCI index. So, MSCI told us exclusively, stating that they have determined that the characteristics of certain investors have sufficient uncertainty that they should no longer be designated at free float pursuant to our methodology. On the back of that, what MSCI has done is that out of the 8 stocks from the Adani Group that were part of the MSCI standard index, they have reduced the weightage. They have not deleted the stocks from the index, they have reduced the weightage. So the stocks that are going to be impacted are Adani Enterprises, Adani Total Gas, Adani Transmission and ACC, within which the top 3 stocks that will be impacted in terms of flows that we understand from analysts. So Adani Enterprises on February 20th expected to see outflow of a little over $180 million. Adani Total Gas expected to see outflow of a little over $120 million. And Adani Transmission expected to see outflow of a little over $160 million. These are quite sizable in terms of the outflow. Now, along with that, there are some other stocks too that will be impacted on the back of the index review. So, Bank of Baroda as well as CG Power will be added to the MSCI Standard Index. Bank of Baroda is expected to see flows of over $130 million, CG Power over $150 million, while Biocon is going to be deleted from the index, expected to see outflow of around $78 million. Along with that, in the MSCI Small Cap Index, there are quite a few changes. So 24 additions and 5 deletions are that's the entire list as far as MSCI Feb index review is concerned.
Okay, all right. So that's another update as far as the Adani Group and, of course, the MSCI changes are concerned. Vivek, thank you so much for those details. Moving on to a CNBC TV 18 exclusive. Promoters of Shree Group have submitted a settlement proposal to withdraw the group companies from insolvency. Sources say the promoters have submitted a plan to the lenders, claiming that the current plans do not offer fair consideration to the group's creditors and stakeholders. Ritu Singh joins us now with the details. Ritu, this was unexpected with voting closing soon.
Well, really, this is a very last-minute twist because we understand that the promoters of Shree Group, that is the Kanoria family, have now submitted a proposal to withdraw the company from insolvency under Section 12A of the IBC to the administrator of these companies. Now, this settlement proposal comes from the Shree promoter firm Adisri Commercial just days ahead of the voting decision on the 3 resolution plans which have been submitted for the company from NARCL, Autumn and a consortium of Valde and Arena, as we've been reporting. Now, as part of the proposal, the promoters have offered to fully repay the secured and unsecured lenders their dues in the form of various debt instruments, which will include your NCDs, OCDs, etc., over a period of time. This, they propose to do so by monetizing some assets, using some of the cash that is already on the books of the company, and also infusing money through an identified investor, which they haven't named, and so on. Now, lenders, however, we understand are unlikely to consider this last-minute proposal from the Kanoria family, given that the company was brought under IBC by the RBI for governance-related concerns, among other reasons, in the first place. Now, meanwhile, the voting decision, we understand, on the resolution plans has been extended. The decision is likely by the 14th of Feb. And as we've been reporting earlier, in NPV terms, the National Asset Reconstruction Company, that has made the highest offer of 5,555 crores against the total admitted claims of about 32,700 crores from various creditors.
All right, Ritu, thank you so much. That's an important story. Of course, we'll keep getting you more updates on this one. For now, we'll slip into a break. Up next, we'll get you all the cues from the community. Tune into Power Breakfast on CNBC TV 18. We've spoken about a lot of things, equity markets, general news as well. But it's time to talk commodities now. Manisha Gupta is joining us with all the updates from the commodity space. Hey, Manisha, good morning.
Morning, Sonal. Thank you so much for that. I'll start with the gold prices, which are now trading at a one-month lows at around $1,860 per ounce. And remember, we've come all the way from $1,960 per ounce. That was the price that was trading in the previous week itself. Also, gold is headed for a second weekly decline. This is because the dollar index is holding around 103, and the rising short-term yields also seem to be weighing on. The other metal I want to talk about is copper, which also is off its 4-week low. So some buying coming back into this one. There is a slip in US dollar. The China recovery estimates have been stronger. And the markets do believe that as and when the demand picks up, copper is going to be your one major favorite metal here, because starting right from EVs to energy transition, copper is used everywhere. And the kind of production and inventories that we are looking at are much lower than the demand estimates for the second quarter of this year itself. So among all base metals, copper seems to be the one that seems to be headed for a strong weekly close this time around.